And now the top. Mm.
Good afternoon. My name is Mike Mills. I work with Travis Central Appraisal District, and I'll be guiding you through this webinar on personal property. I have with me Derek and Samantha, who are personal property appraisers with TCAD, and we're going to do our best to answer questions and help you understand personal property and its impact and benefit to our community. I'd like to begin by just stating that if you have questions, there is a Q&A tab at the bottom of your Zoom bar. So if you locate that and you have a question during the course of our discussion today, please feel free to type your question in. We will hold questions till the end of our presentation, but we'll do everything we can to answer the questions that might come up during the course of our time together today. With that started and stated, we're going to begin with a little discussion on the property tax system and how it works in Texas. The property tax system, as we see it and explain, consists of three different entities. The first one is us, an appraisal district. So what does an appraisal district do? The appraisal district is charged with determining market value for real property and personal property. And for the course of our discussion today, we're going to limit that to personal property. So using various methods, the appraisal district will determine the market value of personal property within our jurisdiction. We then will send out a notice to all property owners of what their appraised value is. Now you get that appraised value and you make a determination by looking at it that you accept or feel like there's something could be wrong. If something is not correct with your appraised value, then the appraisal district handles protests. So you have a provision under the law to file a protest to basically say, hey, I think you've got my value wrong, and I'd like to come in and talk about that. So that's the protest season. And then the other thing that the appraisal district does is we administer exemptions. So there are various exemptions provided under the property tax code. There are deferrals that are also provided under the property tax code, and the appraisal district administers those exemptions. So if you qualify for an exemption, it could be granted and then administered on the part of the appraisal district. The second player in the tax system is the taxing units themselves. So when we're talking about a taxing unit, we're talking about your school district or your city, anybody that has a right under the tax code to collect tax. They're going to set a budget, and that budget determines the amount of tax that they need to collect. And then that is compared to the appraised value that TCAD in this case sets, and that determines a tax rate that is then applied to your appraised value. So overall, the tax burden, how much tax needs to be collected, is defined by the taxing units themselves, your school districts, your cities, and other organizations. They then both of us transmit all of this to the tax office. The tax office is the third piece in this machine, if you will. They're the ones that actually send you a tax bill. So they calculate your tax using the appraised value from the appraisal district and the rate that's been determined from the taxing unit. And from that, they generate a property tax bill that comes out to you, the taxpayer. They're also the piece in this machine that collects the tax. So they're going to not only send you a tax bill, but provide for collection of your taxes. And the third thing that the tax office does that we're familiar with is they handle other matters like vehicle registration, your license plates for your cars, voter registrations, if you have disability that you need to be granted, or court costs. So Those are the three pieces. The appraisal district determines the value and helps you with any protest of value. And then the taxing units and the tax office administer the tax and the payment and collection of taxes. The calendar has been provided by the property tax code, and we'll walk through the calendar. The calendar says that we set our values as of January 1st of the year. So January 1st is the day that your value is going to be determined to. We're going to send notices out that identify what your appraised value is somewhere between April 1st and early June. Generally, you're going to get it on the earlier side of that window. There are deadlines for you to protest, April 15th. And then if you do a late protest, that would be May 15th. Or sorry, protest would be May 15th or whatever stated on your appraised value. The appraisal district is required to certify an appraisal roll, meaning that the values have been checked, they've been protested if they need to be protested, and they've been determined to be correct. And that date is July 25th of each year. Following that, the entities are able to set your tax rates. Tax rates are set somewhere between August and September, and property bills begin to be mailed out to you in October. In November, anything that needs to be voted upon is voted upon, and then your property tax bill is due January 31st. So those are the calendar items that control your property tax. We're going to spend the balance of our time talking about things specific to business personal property. And the first thing we're going to talk about is what a rendition is. So you may have heard the term rendition. A rendition is a form that can be used by a property owner to report their taxable property. And they're reporting what they owned on January 1st. That report is made to the appraisal district, and it could include both real and personal property. It identifies, describes, and gives the location of that taxable property. It is required on the part of a business owner that a rendition of personal property is made. Real property owners have a choice to submit a rendition, but for our purposes today, we want to talk about what business owners must report. They must report a rendition of personal property to the appraisal district. Why is that good to do? The advantages of rendering a rendition is it puts you in a better place to exercise your rights as a taxpayer. If we have a rendition, then we know for sure that we have the correct mailing address, and we're sure about which taxing entities have jurisdiction to tax. So we can make sure that that's all properly set. The other thing that it does is it allows for there to be an opinion of your own value that's put on record. So whatever you feel that your personal property is valued at, we have a record of that. The chief appraiser will, at the end of the period, send you a notice. Whether your rendition is the same or not is to be determined. But the value that you put as your opinion is considered by the part of our appraisers. Let's talk about deadlines for renditions. Renditions are due by April 15th of the year. You do have an option with a written request to have that deadline extended to May 15th. There is provision to extend beyond that, but typically we're going to comply with the legal requirement to turn in a rendition by April 15th, and if given an extension by May 15th. There are penalties that can be imposed if those dates are not met, So a penalty of 10% of the total tax for that year would be incurred for not filing a rendition on time. 10% could be added if after April 15th or after May 15th with an extension. Additionally, a penalty of 50% of the total amount of taxes imposed could be incurred for filing a false report or for altering, destroying, or concealing a record. So 10% if we're late, up to 50% if we file false reports or otherwise mislead. We'll review again the deadlines. April 15th is the deadline in the property tax code for you to file a rendition. Or if you're not filing a rendition on April 15th, that's the deadline to request an extension. If you do not file or request an extension by April 15th, your report will be considered late. There is a provision for you to file a written request for an extension, and that can extend you all the way till May 15th, 1 month after the statutory date. For this year, April 30th is the deadline to file an application for allocation of value. And for your exemption applications, like your Freeport goods, your mixed use vehicle exemption, your pollution control exemption, or a lessor's application for personal use of automobile exemption. We'll touch on some of those exemptions later in our webinar. All of the forms that are required to fill out a rendition or to file for an exemption are on our website, www.traviscad.org. You can file on our website electronically, and that will get your rendition or exemption directly to us. Or you can mail or contract delivery using UPS or FedEx. Just bear in mind that they must be postmarked or bear a receipt mark on or before the deadline date. If you choose to hand deliver any of your paperwork, it must physically be received in our office before the close of business, which is 4:45 on the deadline date. So April 15th or May 15th or April 30th, depending on what you're doing. If those dates fall on a weekend or illegal holidays, then the deadlines are extended to the next regular business day. Let's talk about the rendition form itself. We're going to look at rendition form 50-144. This is a rendition form to render tangible personal property that's used for the production of income that you own or manage and control as a fiduciary on January 1st of the tax year. The form includes the business name and location, a description of the assets that you're reporting, their cost and acquisition date, and an opinion of value for business personal property. The appraisal district is going to use this information to estimate the market value of your business personal property for annual property tax purposes. The state of Texas requires a business to pay property tax to each taxing unit based on the market value of the inventory and assets it owns or uses in the production of income. We'll touch on that a little bit more as we go forward, but we're going to go through some of that now. A fixed asset is recorded on Schedule D and E. Many times we refer to these as use assets. They're the things that we use in order to produce income. So depending on what we do, that could be furniture that's used in our offices. It could be machinery. It could be signs on our property that direct customers. It could include some leasehold, office equipment, electronics, computer and data equipment. That could be a vehicle or trailer that we use in business. It could include aircraft or watercraft and any other thing that we use for the purpose of generating income. And so that is what is recorded as a use asset on Schedules D and E. We also often, depending on the business that we operate, have inventory and supplies. So these are not things that we use over and over. These are things that move through our business. That could be inventory. It could be supplies that are held by a commercial or industrial enterprise for consumption, processing, or sale. When we think about inventory, we could be talking about raw materials. We could be talking about goods that are in process, so things that we're in the process of building. Could be a finished good. It could be a good that's held for sale, or consigned goods and floor plan goods. All of those are use assets that are rightfully considered and need to be rendered. So all tangible business personal property assets must be reported. That includes any capitalized assets, assets that have been fully depreciated on your books, and assets which were expensed rather than capitalized for income tax purposes. So sometimes we conclude that this is the same as what we report to the IRS, but it is not. We're talking about reporting everything, even if it's fully depreciated. With regard to computer software, if it's software installed on a PC and it's normally considered intangible personal property and not taxable. However, there are times when computer software is vital to the operation of equipment, machinery that needs software to run, then that software is still considered personal property and would be disclosed. We'll go through the sections of the rendition itself. This is the Form 50-144 that we spoke of earlier. Section number 1 is the opportunity for you, the business owner or person who's reporting, to state the name and address of the owner of the business assets. There's a place here to record a business name, to record the location, the address of the business. Critical for us is to get a phone number so we can call you if there are questions. And then an opportunity as well to state what type of ownership is here. Are you an individual? Is this a corporation, a partnership, or something else? So that's the general information about the business that we'll record in section number 1. Section number 2 is where you'll have opportunity to record who's representing here. So you'll state what your affiliation is with the business. If you're the business owner or you work for the business or in some other way are representing the business, you'll notify us of what that is here. And then we'll go to page 4 when we talk about a secured party, which we'll get to shortly. Section number 3 is an opportunity for you to check a box that you would only check if all of your assets were exactly the same as they were last year. So rather than put you through the work of manually reporting everything that you reported last year, you can check this box. And by checking that box, you affirm that your property assets on January 1st of this year, 2024, that they were exactly the same as those contained in last year's rendition. You still need to complete section 3 on page 1 and enter the prior tax year. If it's blank, you sign and then date the form. If your assets are not the same as last year, then you're going to go through the process of filling out the next sections. Section number 4, you'll fill out if the business has been sold or closed prior to January 1st, then you report the new owner's name and address. If there is no new owner, the business has simply been closed, then you'll state the date of closure in section 4 here on page 1. If your business has moved, then you enter that information here too. And if you moved, then we are asking as well for the new square footage that your business is occupying. So section 4 is pertinent to business sales, closure, or moving. Section number 5 is where you select the box that best describes the total market value of the assets owned or used by the business. The determination here is whether those assets are under 20,000 or 20,000 and above. If it's under 20,000, then you only complete Schedule A and Schedule F. If it is 20,000 or above, then you go ahead and do Schedules B, C, D, E, and or F as you need. We'll talk about what those schedules are here shortly. Section number 6 is toward the end. It's the signature and date of the rendition. The signature on this report would have to be notarized unless the person filling the report out is a secured party, and that is defined by Tax Code Section 22.01. Could be the property owner, an employee of the property owner, an employee of the property owner on behalf of an affiliated entity. And if that's the case, then you simply sign, but you also would be doing so with a good faith estimate of not more than 150,000. So if you're rendering less than 150,000 and you meet these qualifications, you're an owner or an employee or other, then you do not need to notarize, but you do need to still sign and date. The rendition, let's talk about the rendition is providing a good faith estimate of the market value of personal property. It's solely for the purpose of complying with the property tax code requirement, which states that you must render personal business property. Good faith estimates of market value are inadmissible in any subsequent protest hearing or suit, and the Travis Central Appraisal District is not obligated to accept market value estimates. Taxpayers with a total value under 20,000 have the option of completing either Schedule A or Schedule B, C, E, and D. All taxpayers must complete Schedule F if applicable. Let's talk about the schedules that we referenced. Schedule A is used only if the total value of all tangible property, which includes inventory, raw materials, your work in progress, your supplies, furniture, fixtures, equipment, and vehicles, if all of that, the total of all of that is less than 20,000 for the Schedule A. You provide an amount for either the good faith estimate of market value or a historical cost when new and the year it was acquired. If you provide a historical cost when new and year acquired, you do not need to provide a good faith estimate of market value. So if you have an estimate of market value now, you can include it for us. Or if you know what it cost when it was new and what year it was acquired, using depreciation charts, we can figure out that as well. But you have the option of providing your estimate of the good faith market value. Schedule letter B rather, is where you list all the taxable inventories by property type. If you need to, you can attach additional sheets or you can provide a computer-generated copy. If you manage or control property as a fiduciary on January 1st, also list the names and addresses of each property owner. For businesses containing inventory, raw materials or work in process materials would complete this section with a brief property description, the location of the materials, and the quantity and good faith estimate of market value. Or as discussed, we could also use a historical cost when new, as long as we have the date that it was acquired. Schedule C. Schedule C is where we're going to list all supplies by property type. So we're talking about supplies, inventory in B, supplies in Schedule C. Again, if you need to attach additional sheets or a computer-generated copy, you can do so. If you manage or control property as a fiduciary on January 1st, also list the names and addresses of each property owner. It's worthy to note that every business has general supplies such as pens, paper, business cards, cleaners, and other things that are required to run an office or business. This value is typically nominal to the valuation of the business, but it does have some value. So we ask that you enter a brief description, the property address, if it's at a different location, the quantity, if you know, and a good faith estimate of market value or historical cost on hand as of January 1st of the tax year. Not all of us track our inventory supply, our supplies on a monthly basis. So you can report an average by dividing the total supply expense for the year prior, and then divide that by 12. You should provide an amount for either the good faith estimate of market value or a historical cost when new and year acquired. If you provide a historical cost when new and a year acquired, then you don't need to do the good faith estimate. We can get that through our depreciation analysis. Schedule D is used for vehicles and trailers and other special equipment. On this schedule, you will list only the vehicles that are licensed in the name of the business that was shown on page 1. Vehicles that are disposed of after January 1st are taxable for the year and still need to be included on this list. And if you need, as always, to attach additional sheets or a computer-generated listing, you can do so. The obligation is to report leased vehicles under Schedule F, which we'll get to next. Leased vehicles must be reported showing the name and address of the owner. As previously, you can provide an amount of either the good faith estimate for market value or a historical cost when new and the year that you acquired it. If you do provide a historical cost when new and the year acquired, you do not need to provide a good faith estimate of market value, and we can depreciate that using our analysis. Schedule E. Schedule E is going to come pre-populated if you filed a prior year rendition. If the original cost was provided on the previous year's rendition, these costs are now pre-printed in the historical cost section on Schedule E. So you'll see a correlation on this form to what you reported the prior year. If you look at that list and you've disposed of an asset prior to January 1st, you can edit the cost in that column and the year row where the asset was originally reported. Enter the cost of any asset that was purchased in 2023 in the appropriate column and the 2023 acquired row. The cost of any asset that may have been transferred in or were not previously reported should be entered in the appropriate column and year. So you're really just doing a check. If everything is the same as the year prior, there's not much work here, but if something has changed, you've acquired new property or sold or otherwise no longer have property, this is your chance to make an adjustment. And again, as prior, either a good faith estimate or a historical cost is entered in the other column of Schedule E. And if you provide a historical cost and you're new and acquired, we can do the depreciation to the current if you don't have a good faith estimate there. Schedule F, we mentioned earlier. These are vehicles that you are leasing or are with you by consignment or other arrangement. You list only the vehicles that are licensed in the name of the business shown on page 1. Again, if the vehicle was disposed of after January 1st, it would still need to be listed below because the date of rendition is January 1st. If you need to attach additional sheets or computer-generated listings, again, you can do so and attach them to this schedule. And leased vehicles have to be reported with the name and address of the owner as well as the licensee. And again, you would provide an amount, either a good faith estimate or a historical cost when new and the year acquired. If you do provide a historical cost when new and a year acquired, then you do not provide a good faith estimate. You're not required to. So those are the rendition form and the various attachments that can be rendered. Let's talk about how you submit that form and those forms to us. Renditions can be mailed to the address of P.O. Box 141864, Austin, Texas, 78714-1864. You can also drop them off to our office location of 850 East Anderson Lane in Austin, Texas, 78752. You could email your rendition to the email address rendition@tcadcentral.org. We also have an online portal. This portal allows you to fill out the forms and send them to us. You'll be prompted to create a new login by using an email address and password. And that address that you can find the online rendition form is www.traviscad.org/renditions. We do have a phone number that you can call if you have questions. That number is 512-834-9317. If you call that number, a customer service representative will help you. You can also email our customer service by using the email address bpp@tcadcentral.org. We would ask that you file the original rendition with this office and retain a copy for your records. Large multi-jurisdictional accounts reporting leased equipment or leased vehicles, or accounts with large volume of assets are encouraged to provide their asset listing via an electronic spreadsheet. And it is of note that TCAD cannot confirm receipt of renditions, extension request, or exemption forms. If you require confirmation, please choose a submission method that will provide a delivery confirmation. That could be an email, where you would have an email receipt. It could be through our online portal, which will give you indication that we've received your rendition, or it could be through some mail service that provides proof of delivery. We're going to walk through some frequently asked questions, and perhaps this covers some of the questions that have been asked, but after we're done with these frequently asked questions, then we'll have opportunity to answer other questions that we've received during the webinar. The first question that often comes up is whether or not the information that you render to TCAD is confidential. And the answer to that is yes, it is. The information contained in a rendition cannot be disclosed to third parties except in very limited circumstances. The Texas Property Code specifically provides that any estimate of value you provide, it's not admissible in proceedings in anything except a protest to the Appraisal Review Board or court proceedings related to penalties for your failure to render. We are going to place the final value on your property, which could be publicly available, but the details in the rendition that you provide is not. Sometimes folks ask, how do you determine original cost? So to determine the original cost, you can refer to your accounting records, such as your original journal entries and account ledgers. The formula is that you would use your original purchase documents, such as invoices or purchase orders, to determine the original cost of the asset, and then you add to that all costs attributed to getting those assets functioning, such as freight cost, delivery cost, setup cost. All of that would be included in the original cost. Can you use bookkeeping records to file your rendition? The answer to that is yes. You would attach those records to the rendition, sign and date it, and then return it to our office. You would include asset listings with the date of acquisition and original cost. All assets that are owned by the business are required to be rendered. What happens if you sold, closed, or moved your business? Will your business personal property tax be prorated? No, there is no proration of business property tax. If you were in business January 1st, then you owe the taxes. So if you close your business January 2nd, you still owe the tax under the current tax code. Question, can I file a rendition late? The law does provide for an extension of time to file a rendition. In order to receive the extension, you must submit the request to TCAD in writing or by email before the April 15th rendition filing deadline. With the receipt of a timely extension request, the rendition filing deadline will be extended to May 15th. Is my business taxable if I operate it from my home? The answer to that is yes. Once an asset is used in the production of income, then it shifts from personal use to business use. This includes personal computers, chairs, desks, or other things that we might have at home to operate our business. This question says the inventory in my business is higher on January 1st than any other month of the year. What can I do? Property Tax Code Section 23-.12 allows a business owner to have their inventory appraised as its value on September 1st of the prior year, 4 months before the normal January 1st date. So if you're unusually heavy every year on January 1st, you can use September 1st as your inventory date. In order to do that, the owner must file a request before August 1st of the prior year to qualify. For example, for the tax year 2025, the application would be due no later than August 1st of 2024. If that application is approved, then the 2025 rendition would include the cost of inventory for September 1st, 2024, instead of January 1st of 2025. What if I have under $2,500 worth of value? Why should I render or be taxed? If the total taxable value of your personal property is less than $2,500 in any one taxing unit, then the properties are exempt in that taxing unit. However, business owners still need to render their property annually to establish a market value at $2,500 and to remain in compliance. So if you have less than $2,500, you still render to establish your compliance with the law. Sometimes businesses go out of business. They inform the Secretary of State that they're going out of business. So the question is, do I still need to inform the appraisal district? And the answer to that is yes, you do. The reason is the Secretary of State does not notify us when your business closes. So if you close your business, the only way for us to know is for you to inform us. And so for that reason, please do so if you close your business or go out of business. What if your notice of appraised value is higher than the amount you rendered? Why would that happen? So while a property owner is required to file a rendition annually, the CAD is not required to accept the rendition if things are missing. So if there are missing assets that are typically seen in your line of business and it was not reported, then the appraisal district can use an alternate method of valuation. That just ensures that everything is being picked up fairly. So if something was missed on your rendition, it can be added by TCAD. What happens if I disagree with my property value? So we send out a property notice, you disagree. Can TCAD adjust your value without you having to do a protest? The answer to that is no. Once the market value notice has been gone out, it's generated, then there is no way for TCAD to change that except through protest for the year in question. That's part of the property tax code. We'd like to provide some resources for help with the business personal property rendition. There are limited opportunities for hearings before the appraisal review board if you find that there are clerical errors, if there's multiple appraisals going out for the same property, or if there's property you've been taxed on that's non-existent, or an error in ownership. These are provided under 2525C of the tax code. Or if there is a substantial error, 2525D of the property tax code states that if the appraised value is more than 1/3 above what it should be, and this is not a residence homestead, then you have the opportunity to go before the appraisal review board. This has to be done before taxes become delinquent. So taxes must still be paid even if there's a late remedy. We'd like to point you to the appraisal district website. That website is traviscad.org. On this website, you're able to do a property search to see what we have in the appraisal records for your business. You can check forms and applications that we've referenced on this webinar today that you can use to render your personal property. We do have property owner webinars such as this one that can be referenced. We have frequently asked questions. We've gone through some of them today in our webinar, but there are more available on our website. And you can also have a chat with one of our customer service representatives, all on our website, traviscad.org. We have attempted to answer questions that have come up through this webinar today, but we'll now take the opportunity to answer others. I have with me Derek and Samantha from the Business Personal Property Division here at TCAD, and they're going to look at and answer some questions that we've not previously answered.
Okay, so we have a question. I changed my business from a DBA to an LLC last spring. What's the effect on my BPP rendition form, if any? On the first section of the rendition, there's a business owner. You would just go ahead and update the new ownership and we'll correct it once we process that rendition.
We have a question. Our company is incorporated in California, registered as a foreign entity in Texas. We only have 2 personal properties, 2 laptop PCs in Texas. Should we file rendition as well? Yes. If you have any assets, inventory, or merchandise in the county of Travis, it will need to be filed on the rendition. Anything outside of the county would not be in our jurisdiction outside of special cases for inventory and freight.
We have another question. We ended a lease and don't have that location anymore. Does that go in business close date? That depends on a couple of things. If the business completely closed and did not relocate within Travis County, yes, a date would go in under business closure. If the business just relocated to another address, there is a spot under section 4 to put a new address and the day it started at that location.
Next question. When is the TCAD depreciation schedule for 2023 available? All of our depreciation schedules are available on our website at tcadcentral.org. You will find the resources available at our forms database.
Okay, we have another question. Leased office furniture and equipment needs to be reported on Schedule F. That is correct. Any property under lease from others will be reported under Schedule F. Those aren't added to your taxable value, but it just gives the appraiser a heads up that you might be missing some assets reported under cost because you're leasing those from a third party.
Next question, what about equipment I am leasing from other companies? Do I submit those? Yes, we do have a section on the rendition designed specifically for leased equipment. All you would need to do is just provide a brief description and who you are leasing the equipment from.
We have another question. We plan to sublease our office to another business later this year. What do we need to do for next year's rendition? You can just indicate under Section 4 that either you are no longer occupying and subleasing the entire space in the new business, or you can indicate that you're now sharing space with the new business, and we can update our records to reflect that.
Next question. I had an old couch and fridge at home, and I moved them to my break room at the office, so I also have to pay on those. I would say the couch and the refrigerator, if they're in the break room, that is considered part of the income or part of the business asset. So I would say you should include those on your rendition.
This also, this doesn't include items that are in storage. So we have a question, what about items that are in storage and not contributing towards revenue? Those would be left off since they're not being actively used by the business. We have a question. We purchased new property in February 2024. Should we list this property in the form 50-144? No. So anything purchased after 1/1 of 24 will be reported on your 2025 rendition. So you can go ahead and leave that off for this year. Next question, how about if we purchased one item and leased to someone else, do we need to report it too? Yes, so if you are the lessee, you do want to go ahead and report that because if it's in your contract for the lessor to pay the taxes, that's between you and the lessor. So we just need to know that those assets are being leased out to somebody else.
Next question, I buy parts for vehicles that I work on. How do I determine that? Every day I buy different parts. What should be the value I submit? So the rendition is based on value or inventory based on January 1st each year. If you don't have a good idea, or if it's changing so much, you can get a total value and divide by 12, which would be based on 12 months of the year.
Next question, do they use the 2023 depreciation schedule for the 2024 rendition? No, we are currently getting ready to publish that 2024 depreciation schedule. It'll be on our forms database once it's ready.
Is there a minimum residual value list for assets that TCAD uses? GAAP depreciates to 0. My understanding is that TCAD does not. There's not a minimum residual value that you can report to us. However, you're correct, we do not depreciate down to 0. Per the Texas tax code, no assets will fully depreciate to 0. They will fall to a nominal value.
And our last question, just a clarification, do we have to report the office supplies, pens, snacks at the pantry we have on hand as of December 31st, 2023? Yes, you can either use and close of business on December 31st or open a business on January 1st, since those numbers should be the same.
I'd like to thank everybody for attending our webinar today. We hope that you found this informative and helpful. Please remember that additional questions can be answered through the means that we provided through our customer support phone number or email. I'd like to thank Derek and Samantha for being here today. They were excellent experts, and they do fine work in our business personal property division. At this time, this will conclude our webinar, and we look forward to seeing you at our next one. Thank you.